Hey everyone, welcome back to Corporate Decoder, the place where we decode the latest financial filings. And trust me, today we've got some numbers that are going to make your head spin, kind of like a tractor trailer after a rough quarter. So, Wabash National Corporation, a big player in making truck trailers, just dropped a report that is a mix of challenges and a surprisingly positive twist. We're going to dive into what this really means for the company. And before we get into the nitty-gritty, if you love getting these straightforward, no fluff breakdowns of corporate filings, make sure you are subscribed. We also have a Discord community, link in the description below, where we chat about all things finance. Alright, let's get into it. This report, filed on the 10th of October, is talking about the period ending the 30th of September 2025, and right off the bat they're re-giving us a peek at their third quarter results, and it's not all sunshine and rainbows. The actual earliest event we're re-hearing about is the 9th of October 2025, which is really close to when they re-reporting this. So for the third quarter of 2025, they are expecting net sales to be around $382 million. Now that might sound like a lot, but it is a significant drop from the previous year where they pulled in $464 million. That is a decrease of about $82 million or over 17%. Think about that, they re-bringing in almost $1 in $5 less compared to last year. This tells us demand for their trailers is definitely slowing down, which is a big red flag in this industry. But here is where it gets a bit complicated. They expect to have earnings of 97 cents per diluted share for the third quarter of 2025. Now this is a huge improvement from the loss of $7.53 per diluted share they had in the same quarter last year. So on the surface it looks like they've gone from a big loss to a profit. However, they also give us these non-GAAP adjusted numbers, and this is where we need to pay close attention. The adjusted loss per diluted share for the third quarter of 2025 is expected to be 51 cents. This is a change from the adjusted earnings of 19 cents per diluted share they had in the third quarter of 2024. This adjusted number is important because it takes out certain things management believes aren't key part of the ongoing business performance. They mention a product liability matter and its tax effects are excluded. When we strip out these special items, it shows that the core business might still be struggling to turn a profit. The company itself admits that challenging market conditions have continued, leading to softer demand, and their expected revenue is actually below what they had originally predicted. Despite these tough times, they are emphasizing that they've managed their money well, especially their working capital, and that they expect positive free cash flow for the year so far. Free cash flow is basically the cash a company has left after paying for its operations and investments. This is a positive sign that they are still generating cash, even with lower sales. Now, let's look at these non-GAAP measures more closely. The company explains that they provide these numbers so investors can better compare their performance over time, especially when unusual things happen. They are excluding a big lawsuit settlement here, which we will get to, and they believe this gives a clearer picture of how the business is doing day to day. Let's dive into the actual numbers in their reconciliation table. For the 3 months ending the 30th of September 2025, they re-showing diluted earnings per S-share of $0.97. But after adjusting for that product liability matter and the related tax effects, the adjusted diluted earnings per S-share becomes a loss of $0.51. That is a big difference, showing how much this lawsuit impacted their reported profit. Looking at the 9 months ending the 30th of September 2025, they reported diluted earnings per S-share of $6.22. However, the adjusted figure is a loss of $1.24 per S-share. So the core business is showing a loss on a per share basis over the first 9 months of the year. It's important to note that this part of the report dealing with the results of operations is being furnished, not filed. This means it is for informational purposes and doesn't carry the same legal weight as a filed document. Now for the big story in this report, the settlement of a major lawsuit. On the 9th of October 2025, Wabash National Corporation finalized a settlement in a case called Eileen Williams, Elizabeth Perkins et al. V. Wabash National Corporation et al. This lawsuit, which they call the product liability matter, was about a tragic truck accident that caused 2 fatalities. The good news here is that the settlement will mostly be covered by insurance. However, the company itself will contribute $30 million. After accounting for insurance, this settlement will result in an $81.2 million reduction to a charge they had taken back in the third quarter of 2024. This reduction involves reversing an insurance receivable of $11.5 million and a large liability for the lawsuit of $122.7 million. The company is making it clear that the evidence in the lawsuit showed their trailer fully met all regulations. They are also highlighting that the jury was not allowed to hear critical evidence, such as the driver's blood alcohol level being over the limit, and the fact that neither the driver nor the passenger were wearing seatbelts. This suggests they believe their trailer was not the cause of the accident. To give you some background, back on the 5th of September 2024, a jury originally awarded a staggering $12 million in compensatory damages and a massive $450 million in punitive damages against Wabash National. Later, after some adjustments with other parties involved, the court entered a judgment for $11.5 million in compensatory and $450 million in punitive damages. Then, in March 2025, a court decided that the punitive damages award was unconstitutional and reduced it to $108 million, keeping the compensatory damages at $11.5 million. So, when you look at that adjusted award in the first quarter of 2025, the company had already reduced the initial large charge on their books by $342 million. During the second quarter of 2025, they also accounted for penalty costs and interest on this judgment. By the 30th of June 2025, they had recorded the liability for the lawsuit and some related expenses on their balance sheet. And importantly, the company states that this settlement is not an admission of any wrongdoing on their part. Like most companies, they have a forward-looking statement section. This is basically a legal disclaimer saying that anything in the report about the future might not actually happen, and that some risks could make their actual results different from what they predict. They mention things like the outcome of legal matters, the economy, competition, and costs of materials. Wabash National Corporation is navigating a tough market with lower sales. However, they've managed to resolve a very significant and potentially damaging lawsuit with a settlement that is largely covered by insurance. And importantly, their core business operations are still generating positive cash flow. The adjusted earnings per share showing a loss is a concern, indicating the underlying profitability might be weaker than a quick glance at the headline earnings per share suggests. But the settlement of the product liability matter is a massive weight off their shoulders, removing a huge cloud of uncertainty for investors and allowing them to focus on improving their sales and operations. The company's direction seems to be about managing through cyclical downturns and legal challenges, and successfully navigating this lawsuit is a major win. The key for them now is to see if they can reverse the trend of declining sales and improve the profitability of their core business. Alright, that is our breakdown of Wabash National Corporation's latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.